This is Andy Chambers. Thank you for joining me for today's update. The first chart we're going to look at is the Dow. The September close over the May high reaffirmed the bull trend. The next upside target for the Dow is the 2007 high near 14,200. The initial hurdle for the bears is the June low of 12,035. The SPY, or the Spider S&P 500 ETF, also posted the highest monthly close of the year and reaffirmed the bull trend. The next target for SPY is the 2007 high of 157.50. The initial hurdle for the bears is the June low of 127.14. MDY, the Spider S&P Mid-Cap ETF, also appears to be poised for a further advance. The next targets for MDY are 190 and 200. The initial hurdle for the bears is the June low of 160.69. Key support for MDY lies at last year's low of 132.94. IWM, the small cap Russell 2000 Index ETF, also looks bullish. The next targets for IWM are 90 and 100. The initial hurdle for the bears is the June low of 72.94. Key support lies at last year's low of 60.09. The overall trend in GLD, or the Spider Gold Trust, has been up since the 2008 low. After a long pause, it looks like GLD could be ready for a further advance. The next upside targets for GLD are 190 and 200. A break of support at 147 would put the bullish outlook on hold. Honeywell appears to be poised for an upside breakout. The next upside targets for Honeywell are 70 and 75. The initial hurdle for the bears is the June low of 52.21. Key support lies at last year's low of 41.22. After going sideways for about 3 years, Lockheed Martin posted an upside breakout in April. Then it pulled back, and now it looks like it's ready to get going again. The monthly chart for Lockheed Martin is relatively wide open up to the 2008 high of 120.30. Initial support is seen at 80, with key support at 66. Lowe's appears to have made a higher low bottom in August. The initial targets for Lowe's are 35 and 40, although we think it could go further than that. A break of support at the August low of 24.76 would void the higher low bottom setup. GCI, or Gannett, rallied into resistance at 20 and pulled back. A further advance is expected. The initial upside target for GCI is 30. The monthly chart is relatively wide open up to 50. The initial hurdle for the bears is the September 2011 low of $8.28. The September close for Moody's was the highest monthly close in 5 years. The next upside target is 55. The monthly chart is relatively wide open up to 75, so it could go well beyond 55. The initial hurdle for the bears is the June low of 33.86. The key hurdle for the bears is the August 2011 low of 26.79. Marathon Oil appears to be ready for a further advance. The initial upside target for Marathon is 42. A break of support at the June low of 23.17 would put the bullish outlook on hold. The monthly chart for Aflac is similar to the chart for Marathon. A higher low bottom appears to be in place at the June low. The upside targets for Aflac are 60 and 67. The initial hurdle for the bears is the June low of 38.13. The key hurdle is last year's low of 31.25. Well, after one of the steepest declines we'll ever see, the weekly chart for UNG, or United States Natural Gas Fund, suggests that it could be ready for a rally. The upside targets for UNG are 35 and 40. A weekly close below the August low of 1769 would put the bullish outlook on hold. Well, that's the last chart for today. If you buy options on any of these stocks, please be sure to buy plenty of time. Thank you for your time and attention. Good luck and good trading.